Good evening, everyone. Are we on yet? Here we go. We're on. All right, so get out of there, and here we go. Where are we? Greetings, everyone. This is James coming to you from Dividend Stock Talk. Today is Tuesday, May 16th. It is 9:01 p.m. on a Tuesday evening. What are you doing up watching this kind of stuff? Anyway, just kidding. Dividend Stock Talk, where we talk about dividend investing. We invest specifically in dividend stocks for monthly cash flow. We look to earn some monthly cash flow from our investments. Now, right now, we have been actively trading two separate accounts, one doing dividend investing, one doing options on our dividend investing stock. So we're going to take a look at both of those, show you where we are and what is going on with both accounts. So that said, let's just jump right on in and take a look at what we're looking at today. Okay, now, whatever you do, don't panic about your stock if it goes down. I'm going to give you a perfect example of what is going on. Now, we bought Macy's, here, M, back in February. Okay, February 21st. We collected some dividends in March. We have dividends coming up again. However, let's take a look at what happened with Macy's just recently. Okay, Macy's starts out the year right around 31. She gets into a trading range of 33, jumps up a little bit to a trading range of 37, goes sideways for a little bit, and then right towards the end of the year last year, end of November, she makes the high of the year at 45. From the high of the year at 45, she drops all the way down to 29 in January. From there, she makes a small incline to trade in a range of 32 for a couple of weeks. That's where we got in. We got in at 32. However, we got in, she dropped down to a trading range of 29. She's trading in 20 and 29 for a couple of weeks. Now, all of a sudden, big drop down to 22. 22.82, new low of the year. So we got Macy's. Now, we all know Macy's has been around for over 100 years. A very well-known company. They got stores in almost every major mall. However, the last 4 days are down days. You got Monday, which is today, Friday, Thursday, and Wednesday of last week. So where does that put us? Well, we have 1,621 shares. Okay, let's view this again. 1,621 shares, we got them in at $33. So we're looking to get out of these 1,314 shares, or 1,621 shares at $33.10. It's going to be quite a while for it to hit that number again. So what I might end up doing, even though this is against one of my rules, is I might just end up selling some options against them. I got 1,600 shares, that's 16 contracts. How much can I get for 16 contracts? Let's quickly take a look. Macy's. Alright, here's where Macy's is right now. We want to go to the regular old single spread, or the single option. Now, she's at 22.82. The only thing worth doing anything is 23.50. Now, 23.50 at 10 cents, 1,600 shares, give me about $100. I don't know. What do you think? I'll do some cash flow, and I don't see a 23.50. Now, that's too close to where we are now, because see, that would bring us up 23.50. She's at 22. 23.50 would bring us up right about here. And that's not that far away. And that's 3 days. You know what? I'm not going to do it, because I'm so far below where I want to be. So that's not going to be a happy camper. That's just 3 days away. So let's get out of that one. 10 days away. That's the 24 and a half. 25 at 5 cents for 10 days. Let's not do that one. 24 days. Second week in June. 25 at 26. That's the 26, which would be right there. How much would that be, though? You get 16 contracts, right? Okay. $128. Actually, only $116. And we'll be losing quite a bit if we actually sold on that one. So I think I'm going to pass on that. Just hold on to it. Let's go back to the monitoring. Okay, BMO. Let's go take a look at that. Show you where we are. BMO. All right, BMO is in trading range of 63, 64. They traded for 6 or 7 months, right up to election time last year. Election time last year, she goes from 63 up to 74. Trades that way for quite a while. Now she's down to $69 area, and we have this one at 74. Wow, it's quite a bit of a drop. Anyway, we got in April. It's May, June, July. We're looking somewhere in July. We'll be collecting dividends again on this. I'm not going to sell it at a loss, so I'm just going to hold on to it. And that was BMO. DFS. Let's take a look at DFS. DFS starts the year off 55 area, trading range of 55, 56, 57. It goes that way for quite a while. Right around election time, she jumps from 56 up to 69. And that's a big ass jump. But she trades for a couple of months up there, and the last few months she's been going down. From 68, she's down to 60. Look at all these down days right here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 down days and 4 up days. To me, that is not a happy sight. However, we got 800 shares. We should be collecting dividends probably today or tomorrow on DFS. Yeah. Okay, so we'll be collecting dividends today or tomorrow on DFS. We're still down 5,000 on DFS. We're going to hold on to it. Dropped another $600 today. But you know what? It's not a big deal. It's a company I plan on holding, until it hits the target. The target's not that far off. It's 68. Right now she's at 60, so it's $8. That's a 10% move. Could do it. Don't know. Okay. LMT. Got Lockheed Martin. Anyway, we just got into this position yesterday. Lockheed Martin. 100 shares. Okay, 271. She starts out at trading range 241. She travels for a couple months there. Goes up. Hits 256 for a couple of months. Hit peak in August, second week of August. Then she drops way down to the low of the year, the end of October, at 228. From there, she's kind of a little bit choppy. Trades for a little bit in 253 area. Now, she's been going sideways for the past few months in the 271 area. Now, Lockheed Martin, a big government contractor, we got 100 shares at 271, and she's at 271.65. We're down just a tiny bit, but that's not that big a deal because we plan on holding on to Lockheed Martin for the next couple of weeks because they got their dividend coming up in about 2 weeks. We just bought this one yesterday, so I'm not that big on getting rid of it right away. Macy's, we already went over Macy's. SKT, another one that does not make me happy. It's strange that we had 5 stocks all go down at the same time. Every single position we have. All right, that's just in this account because the other account is totally different. Okay, She starts out the year at 34, slowly takes about 2 months to get to a trading range, the high of the year in 41, goes for a couple of months there, slowly drops down to a trading range of 34, stays there for about 5 months, drops down to 32 for a couple of months, and then from 32, in beginning in the middle of April, she drops quite dramatically from 33 down to 25, 26 is where she is now. So SKT, we're going to SKT for 32.88. So we got a ways. Excuse me. We got a ways to go with SKT before they're actually going to do anything. But like I say, if we don't sell at a loss, then we're not actually losing anything. Now these companies are good, strong companies. I don't mind holding them for the long term if I have to. I don't really want to, but if I have to, I will. And I'll just keep collecting dividends. We got one more dividend to collect on, like I said, on DFS. We should be collecting that either today or tomorrow. And then Lockheed Martin, we shouldn't collect dividends on that for another 2 weeks. Macy's, next week, should be collecting dividends on that again. That'd be pretty cool. Still getting those dividend checks coming in. You know, our account's not that huge, so we're only getting like 1 or 2 dividend checks per month. All right, so that's this account. Let's get out of the dividend capturing and go on to the dividend investing with the options. Now, I don't have a lot of positions here. I usually carry like 8 or 10 positions in the options. But this one, I have very few positions because we ended up taking a very large position with International Paper. Now, we did a broadcast yesterday on International Paper because I had a guest speaker yesterday and they wanted to come in and give their little 2 cents. He thought it would be fun. And he had a little bit of a good time. So we made a couple of plays. If you had a chance to take a look at it, let me quickly bring up International Paper and I'll show you exactly what we did. International Paper started the year off at 41, went a couple of months at 41, jumped up to a trading range of 47, traded there for a few months. After a quick little bit of profit taken, she shoots up to a trading range of 53, trades there for 3 or 4 months, and she's at 52.88 at this moment in time. Now, as you see this downturn right here, we've got a high of 55, 53. From there, we had a bunch of down days. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 down days. So we ended up last week doing a spread, a debit spread last week. We were looking to hit a 40% or 50% return, International Paper. However, we missed that target, so we end up doing is we end up buying back one of our calls, and that allowed us to get into International Paper cheaper than we initially were going to. So we ended up buying 5,000 shares of International Paper at 52. Okay? Now we got that last Friday, which was 3 days ago. Now, she opened up yesterday at 53.01. So we could have taken the $5,000 profit right off the top. But instead, what we ended up doing, we ended up selling 50 contracts of the 53 call for this Friday. And what did that do? That gave us an additional 44 cents per share, which 44 cents times 5,000 shares is right around $2,100. So we made an additional $2,100 just for that covered call position. Okay, that's $2,100 plus we're selling it at 53, $1 more than we paid for it. That's $5,000. So $5,000 and the $2,100, that's $7,100 profit just for this week for doing a covered call from last week. And we didn't originally intend it to be a covered call. We just originally intended it to be a debit spread. Now we would have collected just a couple of $100 on the credit spread, on the debit spread, because we bought it at I think like 37 cents, 37 cents, and we sold it at 50. But we would have sold it at 50 had it hit the marker. It didn't hit the marker, so we got out early. And what ended up happening We ended up buying the 5,000 shares. We tied up $132,000, but we made $7,000 off of it. Okay, so, well, I shouldn't say we made $7,000 off of it, because as long as this thing closes above 53 come Friday, we'll make our $7,100. If it doesn't close above 53, we will end up holding it again into next week, and we can do another covered call next week. But I do want to get out next week no matter what, because the dividend is coming due, or they're paying up the dividend next week, and I do not want to hold it through that. I want to collect the profit, and I want to get out. Because right now she's at 52.88. She's above the 52 that we paid for it. We already collected the 44 cents per share for the 53 call. Now, if it doesn't hit the 53 call, we can always turn around and do another. Let's quickly take a look at what does it look like. IP International Paper. All right, that's got 3 days left to it. Let's get rid of that one. This one give me a rough idea of what we're looking at. Okay, at this moment in time, this week, the 53 call option is worth 27 cents if I was going to sell it. If I wanted to buy it back, I'd have to buy it back at 38. Don't want to do that, I want to let it go. However, next week, all right, it's worth another 43. That's at today. We have 3 days, Wednesday, Thursday, Friday, that time to eat up to find out what it's going to be worth next Monday. So we can turn around and resell it again on Monday, make another $2,000-3,000, and still sell it for more than what we paid for it. Anyway, that's International Paper. If she closes above 53, we make $7,100 this week. If she closes below 53, we collect a $2,100 from the covered call. We still own the stock, and we can write another covered call next week. Give us another $2,000, hopefully. I can't say definitely. I can say hopefully, because International Paper does have its dividend coming up, and historically speaking, it does usually go up just before the EX date, which, like I said, is coming up next week. All right, so that's International Paper, and that's what we did yesterday. If you get a chance, take a look at it. It was kind of fun. I had my son in here yesterday. He had a good time. He said he wants to do it again, so we will see, depending on how everyone thinks. All right, let's quickly take a look at GS. GS, Goldman Sachs. I'm not a big fan of Goldman Sachs. However, I'm not going to fight the trends, and I'm not going to fight historical performance. I may not agree with the company, in their philosophy, how they rip people off, that kind of stuff. I don't really care. I just look at the numbers. If the numbers work, I buy it. All right, we are down $665 on Goldman Sachs since we opened. Goldman Sachs has opened up the year at 158. She traded sideways for about 4 or 5 months. Go right into election time. Goes from 176. You gotta be kidding me, really? 176, 177, right around election time. She jumps up to 240. Trades there for a couple of weeks, drops down to a trading range of 225, and she's been here for a little bit of a time. Now, what position do we have for Goldman Sachs? Okay, we got the 222.50 and the 225. All right, she's at the 225.60 at this moment in time. So, ladies and gentlemen, do you know what that means? That means, simply put, if the stock goes up, we make money. If the stock stays the same, we make money. The stock can go down even. Not a lot, but it can go down a little bit. It can go down as much as 59 cents. And we still make the money that we wanted. This is why I do debit spreads. Okay, I do some credit spreads also. But mainly debit spreads, because you get a high return for your money for a very short period of time. Now, using the dividend payment as a precursor or as an indicator or a sign or a signal or whatever you want to call it. Using a dividend as that and looking at historical performance of what the stock did last year, the year before, the year before, the year before, just before the dividend date, gives us a good indication of what we might be able to expect coming up in the next week or so. So we get 2 weeks before Goldman Sachs pays out their dividend. And historical charts are saying that it moves up in that time frame. So I bought this position, 220, 250, 225. We can look making a 40% return on our money as long as this thing stays above 225. So if she goes up, we make money. She stays the same, we make money. And she can go down as much as 59 cents and we will still make money. Okay? That's why I like debit spreads. Okay? Even though it says we're down $600, we are not really down $600 because it is over the price that we sold. And we bought the 222 calls and we sold the 225s. Okay? As long as she stays above 225, we are golden. Alright, golden. That's funny, Goldman Sachs. I didn't intend that. No, I didn't. The international paper, we just went through them. But bring it up again just to quickly go over it. International paper starts out the trading range, 42, 43. A couple of months there, jumps up to the $47 area, trades there for a couple of months. Right around election time, she goes from 44 up to 53, 54, so in that area. She makes the high of the year towards the end of January at 58. Comes back down to the trading range. She settles in around 52 where she is now. Now, we originally did the spread last week. The 51, 52. She dropped below 52, so we ended up buying back the put spread. The put. So all we had was the call, so we ended up buying it at 52. So we own 5,000 shares at 52. Yesterday we sold 50 contracts at 44 for $2,100. Now all we're doing is waiting and hoping this thing stays above 53 by the end of Friday, by the close business of Friday. JNPR. What is that? The Juniper Networks Incorporated. Never heard of them. What do they do? Does anybody know? I don't know. Okay, Juniper starts out the year in a $23 area, trades for almost 6 months. Right towards the end of October, she jumps up to 26. Right around election time, she goes from 26 to 28, goes sideways for quite a bit. For the last 30 days, she's been trading in the $30 area. She's at $30.59 right now. And what do we have? All right, we have 30 and a half. So, again, we're in this position where as long as the stock stays above $30.50, we will be golden. We'll be make all that. I usually do trades anywhere between 25 and 65% return for 3 to 4 days. Okay, I usually do the trades on a Tuesday or Monday night or a Tuesday and show you what I'm going to be doing for the debit spreads. Now this debit spreads on Juniper, I think what they were, has us at the 30 and a half. So right now she's at 30.59, which basically means she goes up, we make money, stays the same, we make money, and she can still go down a little bit, and we're still making the money on that one. So we'll keep our eye on this one because she had 2 down days in a row. However, she does have the dividend coming up in 2 weeks, so we'll keep an eye on that. And LMT, let's take a look at LMT. That is Lockheed Martin. Lockheed Martin, like you saw on the last, on the other dividend investing account. She starts off at 240, goes sideways for a bit, jumps up to 257, drops back down to 240. A couple of months, and then jumps back up. It's just all over the place. For the last couple of weeks, she's been trading in the 270 area. Now, what do we have for Lockheed Martin? We have 270, 250. Ooh, they're 20 contracts. So as you can see, We are out of position on this one. This thing has to stay above 272.50, and right now she's at 271.65. So the only way we're going to make money on this is if it goes up. Plain and simple. Okay, now worst case scenario, if Friday comes along and we're not liking the position, we can always buy this call. So we sold this call for 272.50. We can buy this one back, and that way we'll end up having 2,000 shares of Lockheed Martin at 270 come next Monday. However, we're not going to do anything yet because today is only Tuesday, and we got Wednesday, Thursday, and Friday before we can make up our mind on Lockheed Martin. Because we all know Lockheed Martin's a defense contractor, and Donald Trump's a new office. He's a new president in office. We don't know what's going to happen. So let's just sit tight on that one and see what we have up next. TJX. Oh, I've been sitting on this one for a while. TJX. Now this, I'm finally out of this one. This is awesome. Now, many months ago, we ended up shorting TJX because we had a position, a debit spread position. I honestly don't remember. It could have been as far back as February for all I know. And we ended up being in this thing for quite a while. And we needed it to drop below 75 in order for us to get out of it. So we shorted a bunch of shares, and I accidentally shorted 100 shares too many. So I ended up being short 100 shares. So I had to buy them back. I didn't want to buy them back for anything more than 75 because I didn't want to lose on that position. And apparently I didn't lose on that position because it looks like TJX opened. What did it open up at? For some strange reason, TJX opened up at 73.62. And I ended up getting it at 73.33. That's awesome. All right, so anyway, I'm out of TJX finally. So now I have some more money to play with. And it means I can buy one more position tomorrow or tonight. Better yet, let's do one tonight. All righty then. Let's do it. Let's first check and see if we have any questions. No questions so far. Great. So let me go back and see what position we can buy with that little bit of extra money that we just got today. All right. No, I don't want. That's the 16th. That's today. 16th. We want to look at the 30th. That's 10 days away. GS, we did that one, that one, that one, that one. We looked at TSN. TSN. Is that right? Yeah, TSN. Oh, Tyson Foods. Okay, so Tyson Foods starts out the year right around 68.06, drops down to 60. In the next couple of months, she jumps up to 76. She trades at 76 area for a couple of months. She's kind of like scattered all over the place. Then, for some strange reason, right around election time, this is a new one, she drops down to 57, which is the low of the year. Trades there for a couple of weeks. Finds a new trading range at 62. Trades there for a couple of months. Now, she's down to 57.85. This is where she is now. What I want to do is TSN. I want to go in and I want to check the software and see what it says. Oops. Actually, I want to go to Google. Okay. Those are kind of all over the place. There it is. I want to look at TSN. Reset. TSN. And find out what TSN looks like. Now, it might take a while to populate, but for the most part, she should be good to go. Give us our numbers that we're looking at, and hopefully it's going to be a good trade. So that way I don't have to do a whole bunch of stuff all day long trying to figure out where we're going. Come on. Why is that taking so long? Forever. I don't like when that happens. Why is it saying no data? That's a new one on me. Well, this is kind of embarrassing because this is not opening up. Okay. That's odd. Well, I hope you guys have better luck with it than I do. Alright, we're going to get out of there. Go back to where we are. TSN. We're going to go and cheat a little bit. We'll look at the seasonality, see what seasonality looks like for TSN. Alright, here's where TSN is right now. She's going to go sideways for a little bit. And she's going to dip. That's right where, see, that's where we are right now. Here's where she'll be paying out her dividend, and she's going to drop and then go back up. I'm going to say no to TSN. Bank of America, 7 cents. Story. Well, you want to chase 7 cents. BAC. Now, Bank of America does have, this is where we are right now. The blue line represents where we are. This represents historical performance. This is where she is now, right where the crosshairs meet. As you can see, in the next couple of weeks, she should be going up. So let's see what Bank of America has to offer. BAC. Let's quickly take a look at BAC. BAC starts the year off at 14. Takes a couple of months to drop down to a low of the year of 12. From there, she jumps back up to and gets her to trading range of 16 for a couple of months. And right at election time, she got from 16 up to 12, which is almost a 50% increase. Almost 13, yeah. Almost a 50% increase. She's been trading there for the past 6 months, and we are right where we are right now at $23.99. Now, I want to look at the vertical. $23.99, which should be right about here. $23.99, and that's 49. I can make 1 penny off this one. It ain't worth it. This one here is 37 cents, which could be close to 30% return if it goes up 1 penny. What do you think? Because she closed at $23.99. If she goes up 1 penny, I can make 30 or 40% return. Let's quickly take a look at that. How much is that? Okay, $3.85. Make 130 off of that. 130 is, I don't know, about 35, 40%. Okay, I can do that. Make a 30%, 35, 40% return for 1 penny. All you got to do is move up 1 penny in the next couple of days, and I'll be good to go. That's about 30%. Yeah, a little over 30%. Okay. So, as you see what we're doing here, Bank of America is right here. Let me get out of here for a second. This is where Bank of America is. Let's close this out so we can go through this nice and slow. I'm going to walk through this slowly so you can see if you can understand where we're coming from. Okay. She started out the year at 1380. Okay, she went sideways for about a month and then dropped down to the low of the year of 1221. That's where she was back in June, the end of June. Okay. From there, she slowly moves up to a trading range of 1572, and she trades that way for a couple of months, right up to election time. Now, at election time, she was at 1650. Donald Trump gets elected at the office, and in the next couple of weeks, she's up $6, which is close to a 40% increase. Okay, a 40% increase in a couple of weeks. Now she's been in this trading range of 22-23 area. She makes a high of 25.80. So she's already been 25.80. We're looking to get in at 23.99. All right? Because this is where she was just a couple of weeks ago, or a couple of months ago. Can she get back up there? Yeah, of course she can. Okay, so we are looking at the 23.5, 24 spread, which 23.5 is right about here. Okay? And the 24 is right about there. Okay? Right now she's at 23.99. She needs to go up 1 penny and we will make our 40% for 3 days. Now, the reason why I'm going to do this for several reasons. Reason number one, the seasonality is right here where it is. Okay, what's going to happen historically? This is where we are right now. Historically, this thing moves up in the next 2 weeks. Okay? That's where the dividend is going to be 2 weeks from today. Then she drops it down a little bit going into the dividend play. I want to get in and I want to get out. I actually only want to hold this thing for 3 days. I want it to go up the penny and I want it to stay above 24 in the next 2 or 3 days, and I want to collect my 35 or 40%, whatever it is. So we're going to do 50 contracts, 37 cents, and let's see, we should make 650. It's not a lot of money, but we're only putting up 1,900 bucks. Okay. Okay, so the order's in. Does that mean the order is in? No, it means it's going to be sitting in the computer monitor tomorrow morning. Now the market maker can take a look at it and say, no, I'm not going to give that to you. Or he might say, sure, I'll give it to you. I don't know. But you know what? I'm going to take a look at it again tomorrow morning just to see if I got into that position. And I have enough money to buy another position too. Look at that, I got $4,000 left. So let's see what else we got. Okay, Bank of America is okay. BAX. BAX. Baxter International. Do I know who Baxter International is? No. All right, a quick look at the seasonality is going to tell me no. We got 2 weeks coming up for the dividend on this one. And look where she is now. She's at a high of the year. And seasonality-wise, she plans on going down for the next couple of weeks. So I'm going to say no. I'm not even going to plug it into my software because, the seasonality says no. FLR, let me take a look at that, is at the low of the year, which is right here. Now, this, as you can see, is where it is right now. The next couple of days, this thing should be going up. Okay, you see that? Right where she is, 516, 517, 518, 519. Yep, right about there. Okay, should peak out by the end of the week. So, let's take a look at FLR. FLR. Let's open up the normal chart. Standard chart. Alrighty, this does open up a little bit. Okay, she has a trading range of, what is that, 53? 48 to 53 for 6 or 7 months. Jumps up to the 55 area, trades for a couple of months, dropped back down to the 53 area, and now she dips down from 51 down to the 47, 48, 46 area, which is kind of low, but she's got that dividend coming up. Okay, what does that mean? She got 5 down days in a row. I think I might want to look at something else because, 5 down days in a row could be setting a trend or it could be making a bottom. I honestly don't know. Let's take a look and see what they're offering. Okay, it's at 46.62. 46.62. You can get it 46. You can get the 46.50 at 36 cents. Which is right around 40%. 40% for 3 or 4 days. However, you got to find the bottom. I'm not 100% sure if this is the bottom or not. 40% for 3 days. I may be stuck with something on a free flow down and look at this gap. Now, gaps you can play two different ways. One, they have a tendency to fill. As soon as this finds the bottom, she's going to fill this gap right here. Okay? Let's get out of here for a second. Now, there's quite a bit of resistance. Right? The resistance was right here at 49. She got 49 here, 49 here, 49 here, 49 here, 49 here, 49 here, and you got 49.90 up here. But it broke down through that. Okay, see where it is now? It broke down and hit 48, and it kept going down to 46. So this could be, could be double bottom here. But they do have a tendency to fill in these gaps. So this gap right here could be filled. Now they had a gap here and it filled. They had a gap here and it filled. Had a gap here, 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 it filled. So this thing keeps filling the gap. So I don't know. Let's do 20 contracts. At 36. Let's see what happens. Okay, so that's 280 for 560, about 38% return for 3 days. I think I can do that. All right, what else do we got? Pepsi. Ooh, we gotta like Pepsi. Pepsi's kind of like one of those no-brainer trades, However, I'm not too fond of that right there. Let's quickly take a look and see what's happening. Okay, she starts out the year right in the trading range of 103. Jumps up to hit the 106. Slowly declines from 106 all the way down to 102. And then for the past couple of months, since January, she's been going up. So right now, she's hit a trading range of between 112 and 113. And here's where she is today, 113.79. Well, let's see what Pepsi has to say. PEP. And we got PEP at 113.79. $0.88 for 112, 113. 900. That looks like a 25. That's like a 25%. Okay, so let's do 25%. Why not? Let's do 30 contracts. All right. $360. Yeah, it's about 25%. So we can make it 25% off Pepsi as long as she stays above 113. Right? I wouldn't mind owning Pepsi. Pepsi's a good company. All right, let's see what we got next. All right, that's it for tomorrow. Now, Thursday, we have a few more. Oh, Nike. Nokia. Tiva. Now, Tiva's a good one. That's the Mexican telephone, I'm pretty sure. Okay, Nike. NKE. Alright, let's take a look at Nike for a bit. Nike starts the year at 57, drops down, trades 54 for a couple of months. Hits a high of the year at 60. Within a couple of months, she's hitting the low of the year, 49, coming back up. It's a trading range of 54, 55, and she's at 52 at the moment. Look at all these down days for Nike. What's going on there? Okay, so let's quickly take a look at what she does seasonality-wise. Okay, so Nike's right here at the moment. So we're coming into the summer months. Nike has a tendency to go down. Nobody's buying sneakers for the summer months. Looks like they're buying at the end of the summer for the fall months. So we're going to pass on Nike. I mean, it's simple enough. I mean, you can see it, right? No matter what they're offering. I mean, do I really want to buy it and hold on to it for 18 cents? No, I want to take a look at Nokia and see what Nokia is offering. And okay. Okay. And okay, it's right here. Look at this. This is where she is now. She's at a minor dip. 10 days she's got, or actually 11 days, she's got the dividend coming up. So this is one we might want to jump into. Let's take a look at standard chart, see what she's doing at the moment. Oh, this is so choppy and ugly looking. What do I mean by choppy? Here we go. Take a look. Look at all the spaces. Look at the space. Space, 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 space. All right. Now, uncomfortable as it makes me, I'm going to pass on Nokia. They're offering a great dividend, and I'm going to tell you why I want to pass on Nokia. All right, she starts off the year at $5, $5, and they're offering $1 for a dividend. Wow. That makes me want to think, why? Why they offer? Okay, you know, I am going to go to Yahoo and find out exactly why. Because there's got to be a good logical reason why Nokia is paying $1. Finance series right there. There's got to be a good reason why Nokia is paying $1 if the stock is only $5. And okay, oops, and okay, come on. All right, quickly take a look and find out what's going on with Nokia. Come on. Okay, here's where Nokia is at the moment. Take a look at some of the fundamentals. Okay, that all looks fine. And then the EX day is coming up. The yield 18. Why is it saying $1 if they're not really paying $1? 293. Okay, let's take a look at the 10-year chart on Nokia. See what we're looking at. Now, see that 10-year chart. Let's make it a little interactive. Make it look a little bit bigger so you can see really what we're looking at. Okay. Apparently Nokia only pays its dividend once a year. See that? Dividend once a year, once a year, once a year. Kind of all over the place. No rhyme or reason. May 07. May 08, May 09, May 10, May 12, nothing from May 13. They didn't pay it. Dividend, May 13, May 14. Okay. All right. So, Nokia does not give me a warm tingly. Okay. Look where she was, a few years ago. I just want the 10-year. 10 years ago, this baby was at 28. Now she's at 6. Look at the volume. a nice volume. The volume is the green and red lines in the background. See them? A lot of volume. And here you go, volume slowly tapering off. Less and less people are buying Nokia. Why is that? I don't know. I don't care. I don't want to get involved. Thank you very much. Okay, so we're saying no to Nokia. Okay, saying no to Nokia. And that's SKT. They want that one. Oh, this one here. Alright, so we're saying NOC. Alright, well, let's try it again. We're looking at NOC, not NOK. Damn it. I just sent you on a goose chase for nothing. NOC. Here we are, NOC. Starts out in the trading range of 214, goes sideways for a few months. Right towards the end of November, around election time. Is that election time? No, it's not. Okay, yeah, right there. From election time, she jumped from 226 to 246, goes sideways for quite a bit. Now she's in the 247 area. I really don't like getting into stocks that are into the $200 area. All right, Northrop Grumman. Oh, another big defense contractor. Okay, let's take a look at what Northrop Grumman has to offer. NOC. NOC. Northrop Grumman. She's at the 247 area. Let's see what it does seasonality wise. See if it's even worth something we want to get into. Now look at that. It's like almost continuous up. So that is good to get into because nice straight line. I mean, that is a nice straight line from January. You can get in the end. What is that? Yeah, getting beginning of January and get out in November and make money. That's pretty darn good. All right, so here's where we are now. She's moving up. So let's see what we're looking at. Okay, so 247 and a half. The 245, we can make 25 cents, which is a 10% return. Do I really want to look at 10% return? 147 and a half. If I do the 147 and a half, I only make money if it goes up. If it don't go up, I don't make money. That's not something I want to do, so I want to quickly take a look at what is a better trade than this one. I might just pass on, because like I said, I don't like $200 stocks in the first one. All right, so we're going to pass on Northrop Grumman, so that's out of the question. We're going to pass on that.
And if you're so much
and
more
let's see.
you would know that.
Let's see what else we have. SU is Suncor Energy. Now, Suncor Energy is a company I have not really heard of and have not been following them. So let's take a look and see what they look like. Actually, the chart doesn't look that bad. Trading sideways for the $27 area for a couple of months. Makes a jump up to 31 and trades sideways for quite a bit. Now she's at the $31, $32 area. And let's see what they have available for us, $32 area. Before we do that, let's quickly take a look at the seasonality, see if it's even worth us taking a look at. Seasonality is not looking good, so we're going to pass on this one. And I think we got one more to look at. Yes, we do. TEVA, which is the Mexican phone line, I believe. TEVA. Yeah, TEVA. It looks like it's going to go down in the next couple of weeks. So we're going to pass on this one also. I'm not even going to look and see what they have to offer. So quickly going to take a look, see if we have any questions. I'm pretty sure I covered everything. And if I don't have any questions, then there's no sense in me hanging around. No questions, that's great. So there you have it, folks. We are, at this moment in time, 53,000 on the upside. We got 3 positions to look at tomorrow morning and see what they look like. Other than that, this is James from Dividend Stock Talk. You guys want to get your stocks sent to you in your emails, just join in and give us a call, give us a holler if you want to learn how to do it. It's relatively simple. So we're up 53% so far this year, and we will talk to you on Thursday, because Thursday we're going to be going over what our positions are going to be for Friday, because Friday the options expire. So we are out of here.